Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, June 6, 2015. This week, S&P 500 ended the week with a small loss, while the small caps bucked the selling pressure and actually gained. The KRE and IWM will look at those two ETFs. We'll also look at bonds, which are maybe entering the bear market, and we'll examine where those where the bonds going. Gold and gold miners keep sliding, and also natural gas is close to another 52-week low, and we'll look at that as well. All right, let's go right to charts. So this is a chart of S&P 500. So first of all, S&P 500 is bullish since we hit all-time high just a couple of weeks ago and an all-time closing high also a couple of weeks ago. Since then we kind of corrected, and actually last 2 days we closed below the 50-day moving average, this red line right there. So this indicates that there was some selling pressure, and the bears are kind of coming out of the hibernation more or less. Now look, this is a MACD. This is one of the indicators that measures the momentum, and you can see that MACD is actually getting very close to a negative crossover. Now in the past you can see that when the MACD crossed over to the downside, the bulls stepped in and pushed the prices right back up. You can see MACD crossed over and then prices were pushed back up. So this could be viewed in two different ways. One way is that there could be more downside until MACD stops dropping. Another way of looking at it is that we're getting close to an oversold condition, and bulls will step in and push the prices higher. Same goes for breadth momentum oscillator ITBM. You can see it dropped into the negative territory, but and it's a similar situation. We can look at it from two different perspectives. One is that you can see prices push lower, but the other one is that we will eventually get bulls to step in and push the prices back up. IWM, the Russell 2000 shares, you can see that it bucked the selling pressure, and actually on Friday we finished with a gain. Keep in mind that IWM, the Russell 2000 shares, is something like over 20% composed of small cap financial stocks. So small caps outperformance is certainly a welcome sign, and it's a good sign for the market when the small caps are outperforming the large caps. Pretty much similar picture. We can see the breadth momentum got pushed into a negative territory, but most likely the buyers will step in and something like this will happen again. We'll see the prices pushed higher again. Of course, anything is possible, and you know, at this point of the game, it's still bullish, clearly bullish chart. You know, all-time highs here. And if we look at SCTR, Stock Charts Technical Rank, we can see that IWM is now back into leadership position as well. And then for comparison purposes, this is a KRE, the Regional Banking Index ETF, which is composed of small cap banking stocks. You can see that it hit an all-time high right there, or at least a 52-week high right there on Friday. So that kind of shows the strength of the market. Let's look at bonds. TLT, 20-year plus Treasury Bond Fund. It got hit pretty hard over a couple of last, few months back. Since a few months back, broke several support levels, and also just 3 days ago broke another support level by closing below it and confirmed it on Friday by closing below this level again. So bonds are certainly under pressure. At the very least, the treasuries are certainly under pressure. As I mentioned before, this was a kind of test of the resistance, and it clearly failed it. You can see it bounced off the 200-day moving average and fell below it, fell right below. So there is now overhead resistance that's reaffirmed and a support break. But however, once again, I'm not yet ready to turn bearish on TLT and on the rest of the bond market either. So next chart I'll show, this is a 20, this is a Barclay Composite bond index that goes back 18 years, and here the price is removed, and what I did is I plotted the blue line right there, which is a 50-day moving average, and the green line, which is a 200-day moving average. You can see that over the past 18 years, that's where the index begins rather, you can see that the bonds pretty much did nothing but go up. There were several bear markets, short-term bear markets in the in the stellar run for bonds basically. But you can see that they were very short-lived, and if you were trying to short those opportunities, you would probably be whipsawed out really quickly. And this one in 2013 ended, and bonds resumed uptrend. So for now, we're right there, and you can see that the 50-day moving average is still haven't even crossed below the 200-day moving average. So we're still in the bull market for bonds, and I'm not yet ready to call bonds bearish. Definitely not. All right, next is gold. Gold, this is a daily candlestick chart of gold. I mentioned that this breakout kind of failed miserably right here, and then it just kept sliding down. This week, however, it looks like it may have held this support. On Friday, it went as low as, let me see, 1162. So you can see that if it closed at 1162, it would have broken the support, but it looks like it held on. So we'll see if we get some kind of a short-term rebound and possibly a continuation lower afterwards. Still a bearish security. Gold is a bearish security, and this is kind of like a continuation of the bigger downtrend. Similar picture for GDX, Market Vectors Gold Miners ETF. Bounced off the 200-day moving average, continued lower, broke this wedge with the gap down right there, and it closed below the 50-day moving average 2 weeks ago, then kind of rebounded with a rising wedge, and then on Thursday broke again this wedge again and closed even lower on Friday. So still very much bear market, and GDX is alive and well. You can see the advanced decline line right there made a new low, and the price hasn't made a new low. So this is like a bearish divergence. Usually a very negative sign when a advanced decline line makes a new low and the price of the index itself has not done so. So most likely lower prices will follow. Finally, let's look at natural gas. Also a bearish security. You can see the 50-day moving average is below the 200-day moving average. Price has been sliding lower and lower, and we had a pretty sizable rally there, a rebound. And I always questioned it, and I was looking for shorting opportunities, and this opportunity did occur right there on the 20th when we got our short signal per our trading system. If you followed it, you would have been up about 12% if you shorted right there. So pretty productive short that's working out Possibly the prices will retest these two lows. It's already kind of getting there, and if it holds, then we may see a rebound. If not, we may see a continuation lower to 2012, I believe, even earlier lows. That's it for this week. Please do follow us and come to MasterChartsTrading.com. We have a public chart and social media pages, and all of the charts that you saw in this video are located on this public chart page. Also, please do follow us on the Twitter, Facebook, YouTube, or StockTwits account, and sign up for our mailing list as well. Thanks for watching, and have another great trading week.